Hello and welcome to our look at the upcoming September 10th trading session. In front of you I have the economic calendar as per usual, and right off the bat the first thing that we see is French non-farm payroll number, anticipated to be 0.1% for the quarter. Probably not a major market moving event, but could have an effect on the euro, as France is the second largest European economy. If we get some horrible reading, that could be very negative for the euro. A little bit later in the day, we have some other numbers coming out of France and Norway, neither of which I would anticipate much as far as a reaction. But really, after that, what we are paying attention to is the crude oil inventories. That could be one of those things that move the markets pretty drastically in the light sweet crude market, obviously. Most of the action is actually going to be in the Pacific. We have the Kiwi interest rate decision. It's anticipated to stay the same. If you have the ability to trade the New Zealand dollar, then that could be the market moving event for you of the session. The monetary policy statement coming out of the RBNZ could also move the markets a little bit. If they say something about concerns about global growth, that type of thing, could be a risk asset off type situation. That being the case, we'll have to see what they say in that and the rate statement, etc. A little bit later on, we have employment change out of the country of Australia, as well as the unemployment rate, anticipated at adding 12,000 jobs and an unemployment rate of 6.3. This is going to be solely an Australian dollar moving event, in our opinion. That being the case, if you are trading the Aussie, that might be something to look at. In general, though, we believe that most of the market moving activity will be in the Pacific area, and it'll just give you an idea of risk assets. Beyond that, probably going to be a very technical day, and with that, we'll take a look at the chart. The first chart I have ahead of you is the Footsie, and you can see that we've had a fairly stagnant day. However, there seems to be a significant amount of support in the general area just below, with probably a focus more or less on the 6,800 level and extending a little bit higher. Because of that, it appears to us that we should get a little bit of a bounce, and that's what we're waiting for, some type of bounce from the 6,800-ish area in order to go long. We get that bounce, we think we target 6,900, and then finally break above there. So perhaps calls will be the way to go on a supportive candle. Shorter term charts coming out of the Footsie in this region. You can see that the euro dollar is trying to bounce a little bit from here. That makes sense. I mean, after all, nothing can move in one direction forever. 130 above is a bit of a ceiling as far as we're concerned, though. So really what we are looking for is short-term opportunities just above to sell off some type of resistive candle. If we get that resistive candle, then we're looking to buy puts in order to take advantage of more downward pressure, we believe, ultimately to the 128 level. 130 again should be a massive barrier to break above, so we are just going to let the market come to us and continue to express a negative opinion on the euro. And talking about those Australian jobs, or Australian economic numbers during the day, the 92 area does appear to be rather supportive. So the jobs numbers do prove to be fairly robust, an excellent place in our opinion to buy calls. Puts will be difficult just simply because there's only so much room to go lower, and certainly the risk is to the upside. We still feel that we're basically range bound and right at the bottom of that range. So buying calls to the upside will be the preferred route, but we need to see a little bit of support here. We might have to wait until after the jobs number comes out of Australia. And finally, looking at the DAX, you can see that we did fail a little bit during the session, but 9,800 is pretty significant in the sense that there was a gap there. So really, it's not a big deal to imagine this area here, right around 9,600, offering support. So we're looking for some type of supportive candle in order to start going long again via calls. Above 9,800, buyers of calls too, but you may want to date these out as far as possible. 10,000 is a target, but there is a lot of noise between 9,800 and 10,000. Although we do believe that it will get there, the catch is that it might take its time getting there. So that being the case, a little bit longer dated options might be the way to go. And with that, we've taken a look at the upcoming Wednesday, September 10th trading session.